Hey guys, and welcome to my new episode for my investment account. Now, apologies that last week there was no episode on Sunday. After the calamity of investing for £2 in BlackBerry and GameStop, I thought I'd give it a week for the market to sort of even out and keep an eye on these two stocks and see what I'll go going forward. Now, with that investment I did for these two companies, I've pretty much gone over the threshold of what I wanted to invest for the past couple of weeks. And that's not a problem. I did put money into the two companies which I had available and I was willing to risk. So there's no problem in that. I just thought I'd give a bit of a gap for last week just to see how we go going forward. So, because of that, the first two companies we'll talk about, and then afterwards we'll go through the rest of the portfolio, along with things I'll be looking to buy for the next coming week. So, BlackBerry, as you can see, has almost jumped on the trend of the other companies which have experienced the whole Reddit hype. And from the highs of the beginning of the month of about $14, it has been on a steady sort of decline, unfortunately. It had a bit of a rally last week, went to $13, but it's pretty much been on the decline since. Now, as you can see, in the grand scheme of things, for the past month, I've bought at a decent price of about $12 average. In the long term, I think it's a good price. BlackBerry will be a company, I believe, going forward, which will have major benefits to the world. The software it's developing is going to be front leading for all forms of cybersecurity, and the companies they are involved with are the best companies in the world in terms of tech. And with us trying to move to more automated vehicles, cybersecurity is going to be more important than ever going forward in the next couple of years, and I think BlackBerry will be at the forefront of it. So, because there's such a high proportion of my portfolio in BlackBerry at the minute, I will monitor the price. If I do see it going sort of the under the $10 mark, which the way it's going in the minute could be the case, I may invest. But for the next couple of weeks, I just want to split up my portfolio proportions because they are very heavy in BlackBerry and GameStop at the minute, and just spread out into the more secure and the more financially risk-free dividend companies in the world, just to sort of give me a bit of a buffer in what I think will be a bit of a rough climate for 2021. Now, a lot of people are saying that we are in a bit of a stock bubble, and looking at how stocks are reacting at the minute, I do agree. So having that bit of stability in my investment account, investing in the dividend products or maybe these Vanguard ETFs, can just give me a bit of a footing just to ensure that I'm not losing money rather than gaining money over the long term through solid investments, which is something I believe I got caught in the hype a bit with BlackBerry and GameStop, and I forgot the fundamental values of pretty much long-term holding will always work out better than short-term volatility and hype investments. So that's what I want to keep doing, keep building this portfolio. And although I do think BlackBerry will be good long-term, it is at the minute a very volatile and hype stock. So it'll be one we'll keep an eye on, track throughout the year, and just see how it performs. And if we can get in where I think it's an option and a chance for us to profit off, in the long term, I don't want to deal with any of these short-term hype stocks again. We'll do that. But whenever I do, I'll make sure to let you guys know, along with the reasons of why we've done it. Now, the big one and the big hype stock is GameStop. So it's pretty much continued to drop since last week. Last week, it pretty much started at $50, and now we are touching the $40 mark. We even had a point where we were below $40, which is just a fall from grace. Now, many people might say, why don't you sell GameStop? I think personally I'm too far beyond that now. I've pretty much lost half my investments in GameStop, and to be fair, with all the issues going in terms of court cases and government getting involved and similar stuff to this, I think I'll just ride the wave. I think there's everything to me. I will only be losing a little bit more if I sold. I've already lost most of the investments. I think I'll hold on, see what becomes of it for the rest of the year, and if I do have a chance to either sell for a short loss or maybe best case make a little bit of money off it just to get this investment out of my account and move into some more safer investments, that's what we're looking to do. And just to highlight the volatility of this stock market, just want to quickly go over EHang. Now EHang, I do have a little bit of it in my portfolio. It was one of my first things to sort of get into the Asian emerging markets, and this was before I discovered the Vanguard ETF, which is what I think I'll put most of my money in for the emerging markets, because it is something I believe will be pushed in the future. Now, it had a bit of a very sharp rise over the past couple of days to weeks, and as of sort of Tuesday, February 16th, it was $120 it was trading at. Now, if we fast forward to a little bit later that day, it begins to nosedive. And finishing on the 16th, on the same day, on Feb, we've gone from a 120 sell to the point of it was $46. Now, this is the level of volatility we're currently dealing with. This was a drop of roughly $60 in the best part of 2 hours. And although it did bounce a little bit and recover, it's pretty much still trading at half the price it was on Tuesday. And that's the kind of volatility we'll be dealing with. These stocks are inflated for many reasons, and that's why I'm trying to push towards some more sensible, solid companies which I can ensure will continue working and still profit. And the way of using dividend companies for this is probably the safest way possible. So those are the 3 companies I just want to highlight for this week. The BlackBerry and GameStop will be things we'll go over sort of weekly and monthly, just because it'll be quite fun to see how they will do. Now, looking at my portfolio, the most alarming thing is we are currently £700 down, which is probably 15% of my portfolio. Now, most of this is actually down to BlackBerry and GameStop. I think total for BlackBerry I'm down 200, and for GameStop I'm total of 660. So most of that is down to them too, which hopefully over the next year or two, maybe we can claw back something out of them and we can get into the green again. And pretty much for the rest of the portfolio, it's been a very up and down week. Some things have really got well, some things haven't, but still the Vanguard trust funds and ETFs are holding a decent price, which is why I'm so glad I've got a bulk of them in my account just to hold some wealth, and they do seem to be growing in profit as well. The cleaning up of my portfolio will be a quick little video I will do some point soon. I know I promised it for the past couple of episodes. It will be done, I promise. This new job I've got for work, it just took a bit more time to get into the swing of things than I thought it would, but we will get there and I will make sure that's there. I've also got another video on the way about cryptocurrencies. I did have some investments in that, so I'll talk through what I've got there, along with other investments I am, just to diversify my wealth. So other companies as well, we did pick up some Sensasonic shares, which is linked to insulin and diabetes. We picked them up, I think it was a couple of weeks ago, and we have done quite well off them. We've profited 35%, and the Sophie is down 10%, but between them both we've done pretty well. Royal Mail is still performing very strong. Like I said in one of my first episodes, I do believe the distribution and the whole e-commerce project of the world and the way Amazon's now taking over will mean that companies like this, FedEx, UPS, will become major holdings in the future. It's the way I believe we'll be working. There'll be a lot less social buying in malls and town centres. We'll be moving to this way of internet shopping and delivery. And Dutch Shell as well. Total was a bit on the down, but Royal Dutch Shell is doing quite well. And that's pretty much it for how my portfolio has performed this week. In terms of companies we are looking to purchase, I'm just waiting for the market to open, so we'll probably do this Monday. I'll talk through it on the next episode, but we'll be looking to pick up companies like Apple, Coca-Cola White's on a bit of a downward trend, and depending on how the 2 oil companies perform, I might pick up Total because it's slightly on the down, and depending on how Shell performs, we could pick that up as well. Similar to EHang, NEO is also having a bit of a rough experience, so that is also something we'll possibly be looking to get out of. EHang we did buy at quite a reasonable price, so we've only lost a bit of it. But these are companies where rather than just performing to the singular company itself, I'd much rather take the money out than go into an ETF. But again, in the video we're looking to do, I'll just talk through what I'm doing, why I'm doing it, and just basically condense down my portfolio. I do think you can have too many stocks, and too many stocks just take shares away from having a much more narrow portfolio which has more money in the better companies. But that'll be a video where I basically sell up, tune down, and talk through my strategy on why I'm starting to focus more on other companies rather than the ones I'll be selling. But that is pretty much me for this week. Next week I will make sure that there's a video out, talk through basically what I'm looking to do in terms of selling and buying, and hopefully we'll be a lot better than the 15% down which we currently are. But if you do have any questions or anything you'd like to raise for a video, please let me know. I'm looking to hopefully at some point when work dies down a little bit, go to 2 videos a week, and maybe there might be reaction videos or some form of financial videos where I can just bring a bit more content to you. But leave them in the comments and I can see what I can do. So I hope you enjoyed the video. If you do, please like and subscribe for future content, and I will see you guys in the next video.